1450 FM 99.3 KNSI. Welcome to Taking You Home with VoigtJohnson Real Estate here at every Thursday morning at 7:23, Saturday afternoons now at 12:53 here on KNSI. Start that home search at VoigtJohnson.com. Brandon Johnson is back with us. Good morning, sir.
Good morning, Bob.
Okay. Last week we talked about assumable mortgages, which I'm sure made some people drive right into the ditch because they hadn't heard that phrase for the longest time, right? It's crazy. Let's begin again by just making sure folks understand you are not a lender.
Correct.
Okay.
I am a real estate agent.
But we are going to talk about the different types of mortgages that are out there, including assumables. We're going to get back there. So what's popular out there right now?
The majority of mortgages that people are having on their homes right now consists of conventional financing,
Okay.
Fannie Mae, Freddie Mac, guaranteed, FHA,
Okay.
which is a lot of times first-time homebuyer loans, and rural development and VA loans
Okay.
are also out there as well too. All of which, in some capacity, qualify or have the ability to qualify for assumable for
Okay.
a buyer. It depends on when they were originated, if they were, but all of them do have categories of being assumed.
Are you seeing very many ARMs out there?
Those are starting to, again, we've talked about this a little bit in, we are starting to see where it makes sense for buyers to do ARMs if
Yeah.
it's a home they don't see themselves in long-term more than, 6-7 years.
Adjustable rate mortgages, the ARM. But if I'm able to get one of those right now, could I be betting that those rates are going to drop, and then within that 5-year period, if it's a 5-1 or a 6-1 or a whatever?
Yeah, and again, it depends on your level of comfort with risk, and a lot of the ARMs aren't what you think of, back in the crash of 2008, 2009, where a lot of what people were getting were negative amortization
Right.
ARMs, meaning
Right.
that you were adding to your mortgage, not necessarily even paying them off. So the more ARMs now are 5 to 7 year ARMs that
Sure.
are fixed rate ARMs,
Yeah.
which aren't the same product.
So I bought a house in 2003, way out of my price range, but I was able to do it with a 5-1 ARM,
Sure.
knowing that I was not going to be there
Yep.
for the full 5-year term,
Yep.
right? So we did that, and a couple of years in, we knew that we were going to get back to Minnesota, so we turned that baby around and sold it, made a bunch of money. That one turned out okay,
Yeah, and
but it doesn't always end that way.
there's a lot of factors. Is your other option renting? What
Sure.
is the fixed rate? How long do you foresee yourself being in that home? So there's a lot of factors you want to go in and just kind of handicap what makes sense for you in that situation.
I was kind of thinking of like in a flipping scenario, right? If you were able to do that kind of stuff, that may be conducive to doing business that way.
Yeah, if you're renovating homes, ARMs are an option. There's lines of credit,
Sure.
interest only. So
Yeah.
there's even a greater option if you're planning on only holding a home less than 9 months or a year, as well too.
But again, you are not a lender.
Correct.
All right, but you do work with a ton of lenders, which is why you know all this stuff.
Yeah, and so what we kind of alluded to last week was we're starting to see a portion of the segment of homes where we're starting to see some marketing towards this home, this seller has an assumable mortgage. And for some people it makes sense. We talked about what that segment of the market where it makes sense. But what I alluded to last week was a home loan at $300,000 at 7% is about the same payment as a home loan at $450,000 at 3%.
Right.
So that is a massive increase in home value that you can get for the same monthly payment by inheriting or assuming a seller's loan. And so what do you have to consider with that? If you see that, you have to say, from a buyer's perspective, you have to find out what that difference in cash is that you're going to have to bring to the table, because you're assuming whatever mortgage balance that seller has. So you may need to bring a significant down payment to be able to make that work. And then you have to qualify for that loan. So whether it's a VA, an FHA, a conventional, you still have to qualify with the seller's lender, just like you would traditionally, but it's not that you just take it over and your name gets transferred.
Yeah.
You have to qualify for that loan still.
Are there some mortgages that are not assumable?
It depends on, again, all mortgages, and I'm speaking in generality, correct? All mortgages do have options to be assumable. It's what was taken out at the time of origination. And when you sign a mortgage, it will say if it's assumable or not.
Okay.
So it's possible that you have a conventional mortgage for whatever reason that is not assumable. Maybe you got a little bit better rate to give up your assumable, you know what I mean?
Yeah.
It depends on the terms of the mortgage when it was originated.
And again, why would someone want to go from 3.5% to the current mortgage rates? They may not have a choice. They may have a job transfer or whatever. They have to sell their home.
Yeah. So from a seller's perspective, if you're giving up, we talked about one of the 4 factors is giving up that low interest rate. If you have one thing just to be considered of, and this is where, when we represent a seller and we
Right.
say, is this an option for you? Like if you have a VA home loan, and you allow someone to assume that,
Yeah.
it may be what you want to do, but keep in mind your certificate of eligibility is still tied to that loan. You probably can't, in most circumstances, go use your VA eligibility and buy a new home. So there's a lot of, we're speaking in broad terms here
Sure.
on assumability. There's a lot that goes into every home buyer and home seller situation on does it make sense. What I'm saying is, for the first time in a long time, we're starting to see this be marketed and we're starting to see it make sense
Right.
in certain situations for both a buyer and a seller.
Who usually brings it up? The realtor?
I think it's mostly incumbent on the seller to say, hey, we have a assumable mortgage. This is where I'm seeing it
Right.
in a handful, just a handful of situations. Seller will say, we have an assumable mortgage that is an option to bring a buyer, trying to market or entice
Yeah.
the saleability of their home.
What a great thing.
So, yeah.
All right. Taking you home, VoigtJohnson Real Estate, Thursday morning, 7:23, Saturday afternoon, 12:53. Start that home search at VoigtJohnson.com. It is obvious the importance of working with a realtor at Voigt Johnson. How do we do that, Brandon?
320-774-2400 or at VoigtJohnson.com.
Start that home search at VoigtJohnson.com. Brandon, thank you.
Thank you, Bob.